Hello, investors. Welcome to the channel where I normally use technical analysis to find possible swing trades. Today, I'm going to do something a little bit different. I was asked to look into possible buys in the energy sector. So I have created a custom stock screener that you'll see here on the screen. And of course, I have to say that even though I am willing to help out and do such screens, this is in no way a recommendation to purchase any of these companies. This is simply to highlight some things that I might be looking for, and perhaps you would look for those same things. And if nothing else, it could spark your interest in a company that you may not have otherwise looked at. But of course, it's up to you to do your own due diligence and do proper research on these companies if you're interested. So with that said, I'm going to dive into these briefly, because otherwise this video would be just entirely too long. So we'll hit the first one here. And the first company is Ardmore Shipping Co. That is ticker symbol ASC. Here you have the annual chart. You'll see it is right in the middle of all the moving averages. It just found resistance at the 200-day and bounced lower. So I suspect that it will continue to drop. The RSI is falling after just barely touching the overbought zone. Stochastics are in overbought and are falling. The volume chart shows several green buying days, and we finally just had a red selling day. And the MACD looks like it has peaked and is starting to fall. So all that makes me think the share price will continue to fall. If we switch over here to E-Trade, take a brief look at the fundamentals. You see there's low short interest. Debt to equity ratio is excellent, outstanding. In fact, it is less than 89% of other companies in the industry. The PE ratio is average, although I have to point out the PE is only 3.05, so that is low. Apparently, the average in this industry is that low. The gross margin is also average, but it is relatively high in the grand scheme of the market at 55%. Operating margin is above average at 40%, and that beats out 71% of its peers. The return on equity is outstanding, beating out 95% of other companies in the industry. And again, growth rate outstanding, beating out 95% of other companies in the industry. Now, the dividend yield it lists here is 11.36% with a payout ratio of only 9.82%. This is, to me, a red flag. The dividend is so high that I'm normally really suspicious of companies that pay such a dividend. But with a payout ratio that low and knowing the industry it's in, this could be a legit dividend if that's what you're looking for. And the second company is Chesapeake Energy Co., ticker symbol CHK. If you take a look here at the annual chart, you'll see that CHK the share price is also stuck kind of right in the middle of all the moving averages. It does seem to be moving with a slight uptrend within the last few months, but it's not particularly strong. And of course, the 200-day is showing a downtrend. So it looks like a short-term uptrend within a long-term downtrend. The RSI is putzing around right in the middle of everything and not really going one way or the other. The stochastics are both overbought. And again, they're not really showing any strong direction here. The volume chart does show a couple spikes, as you can see, of green buying days, particularly high volume, but otherwise the volume looks average and seems to shift back and forth from green to red. And the MACD is also very close to zero. It does look like it just had a bullish cross within the last few trading days, but it is so close to zero that's even tough to tell. And if we switch over to the fundamentals here, you'll notice there is a decent amount of short interest at 7.22%. The debt to equity ratio shows that it has less debt than 79% of other companies in oil and gas exploration. The PE ratio is low at 1.77. In fact, that is lower than 84% of other companies in the industry. The gross margin is outstanding, beating out 89% of other companies. And the operating margin is also excellent, beating out 83% of other companies. These are really high numbers. Gross margin of 86.8% and operating margin of 46.22%. This is a very profitable business. And that's continued down here with the return on equity, which beats out 90% of other companies in oil and gas exploration. And the growth rate is outstanding, which is higher than 95% of its peers. The dividend is lower than we saw for Ardmore at only 2.61%. But again, the payout ratio is 16.89%. So this is a very secure dividend and a fast-growing company. And the third company is Comstock Resources, Inc., ticker symbol CRK. And look at the annual chart here. You'll see they just had an earnings call, which was a miss by 5 cents per share. And that caused the share price to gap down from about 1270 or so down to where it closed yesterday at 1184, which is a pretty significant drop. The RSI shows it is in the middle of the range, though falling. The stochastics are both falling, although the slower stochastic still has it towards the top of the range, not quite in overbought territory, but definitely high. And you do see an uptick in volume with a giant red selling candle due to the missed earnings. And the MACD is very close to zero, just muddling around there, although it does look like it just had a bearish cross. So it wouldn't surprise me if this heads even lower before it is done. And if we switch over here to the fundamentals, you'll see this has significant short interest at over 18%. That is worrisome. The debt to equity ratio shows that it has more debt than 70% of other companies in the industry. The PE ratio, though, is quite low at only 2.50, and that is lower than 76% of other companies in the industry. Gross margin of 74.86% beats out 73% of other companies, and the operating margin of 57% beats out 92% of its peers. So these are, again, excellent numbers. Return on equity is, again, outstanding. It beats out 89% of other companies in the industry, and the growth rate beats out 91% of others in the industry. And dividend is quite high at 3.92%, about triple the market average. And the payout ratio is a mere 5.06%. I'm not sure I've ever seen a dividend like that with a payout ratio that low. And the fourth company on the list is Devon Energy, ticker symbol DVN. And looking at the annual chart, you'll see it, like the others, has a share price that is right in the midst of all the moving averages, though it did not just have an earnings call to affect it. It did have a red day yesterday, but it's only down by a fraction. The RSI shows it not overbought. We're looking at about a 65 RSI and perhaps falling. The stochastics are both in the overbought zone, and they're going in opposite directions there, so it's difficult to draw a conclusion. The volume chart here shows, if you look back over the last 3 weeks or so, there's far more green days than red days, if that tells you anything. Even though the volume was average as far as the number of shares traded, there's quite a bit of green here lately. And the MACD looks like it bounced up to a peak and is falling, but as you can see, that It looks like it bounced up once, fell, never crossed below zero, up again, fell, and it maybe formed a third small peak here. It's tough to say. We're going to have to wait and see with this one. And if we switch over to the fundamentals here, has very low short interest. The debt to equity ratio shows it has average debt for the industry. The PE is also average for the industry. This is the highest PE I think we've seen at 5.89, which is that PE is not very high at all. The gross margin is average for the industry, which at 56% is still excellent if you consider it in terms of the entire market. Operating margin is well above average, beating out 76% of other companies. The return on equity beats out 84% of other companies in the industry. And the growth rate is above average, beating out 61% of others. We have a 8.35% dividend. Again, this is an extremely high dividend with only a 55% payout ratio. So if you're looking for dividends, you may want to consider Devon Energy. And the last company we'll look at today is Scorpio Tankers Inc., the ticker symbol STNG. And like all the others, the share price is right in the middle of all the moving averages, although I will draw attention to the fact that if you look for about over the last week and a half, this has been on a noticeable rise here. So really hit a bottom and appears to be rebounding pretty solidly. And that shows up here in the RSI. You'll see, even though it's just over 60, it's been on a definite uptrend. The stochastics are both, they rapidly pulled from oversold to overbought, and they're both now overbought. Although just a few days ago, a week and a half ago, they were oversold. And if you look at the volume chart, you can see that there is a spike in green buying pressure lately, which we could say it peaked, but it's only dropped for one day. So the true results remain to be seen. And the MACD is rising. It is, for this company anyhow, it's solidly above zero and looks to still be rising. And if we switch over to the fundamentals here, you'll see there's a mild amount of short interest, just about 6.5%. The debt to equity ratio is average for the industry. PE ratio is also average for the industry. Here we are again, 3.18 PE, which I would consider to be very low, is apparently average in this specific industry. The gross margin here is outstanding, beating out 89% of others. And the operating margin is likewise outstanding, beating out 96% of its peers. The return on equity is again outstanding, beating out 94% of its peers. And the growth rate beats out 92% of others. Now, the dividend at 2.13% is still good, but for this industry, that's below average. Now, the payout ratio is only 3.23%. So they are barely supporting that dividend yield. Otherwise, the numbers here look solid. Anyhow, that is the video for today. If you like any of these companies, I again urge you to do your own due diligence and look into them further. Don't let this very cursory overview be the total extent of your investigation. So if you got something out of the video, I would really appreciate it if you would hit the like button and subscribe to help out the channel. And if you enjoy this kind of content, please let me know in the comments below. Also, if you'd like me to take a look at a particular company using the indicators I present here, just mention it in the comments and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.